What is up, tubers? I know it's been a while, but hopefully this episode is going to be worth your while. I have a special treat for everyone. I have developed a pretty solid system here that I am actually going to show you step by step how to put it together, how it works, how to do a watch list, how to do a scan, and how to best try to give you the best opportunity uh, to win some bids. So to get started right away, I call this the Joewee Golden System. I know it's a pretty creative name. Thank you, thank you. No, it is a very solid system. Again, this I'm not giving you any um, advice for trading, but this is a system that I just developed that I've been trying out, and it seems to be pretty solid. And so let's just jump right in and go over it. So the system basically is, let me show you the studies, the strategies, and excuse me, not the studies, but the studies, not the strategies. So we've got an ATR trailing stop. We've got a Moxie price channel adjustment with a mobile look back. I added the mobile look back in there. We have the regular stochastics. We have the mobile basic, and we have an opening range for the upper studies. Lower studies, we have the FW snapback, the RSI stochastic MACD confluence combo, and this one I am actually not using. I am going to close that one out, and I will be sharing these with you at the end of the session here. So let's take a look at each one individually a little bit here. So the ATR trailing stop, these are the blue dots. This is, excuse me, I have to close this out so we can show you. So the blue dots is kind of gives you a safe way to say, okay, um, go ahead, and there really isn't as much resistance in the upward momentum direction. Same with the purple. If you're looking to buy a stock, usually the purple shows you that there's a lot of downward momentum, and you may want to wait before you purchase. So that is the basics on the ATR trailing stop. So the Moxie price channel adjustment with the mobile look back, that is what you see here with the red and the green lines. So I adjusted it with the mobile look back, and so it helps you also with the mobile. If you're unfamiliar with the mobile, basically it is when a close, like in this case, and there's the mobile signal, when there is a close above the top line in the positive direction, that usually indicates a signal to buy, and you can see how it stays above. And finally, the sell signal is when it goes below the bottom line and closes in this case. So we would look here if we purchased roughly and we got out there, it'd be about a 12% gain. That is for folks that want to try to hold on long term and try to extend it in a day trade. But this isn't the indicator that I'm going to be using for the main indicator or for the main buy signal. But I just wanted to show that to you. And also, I have the FWFT stochastics that I altered, and basically all it is showing is the ready lines, the ready green and the grayed out ready. These are the red for the sell signals, and I just grayed them out. I don't use them, but it's still good to kind of have there as well. And the opening range, I don't have it loaded right now. Excuse me, I forgot to add the mobile basic. In the mobile basic, here is the indicator right here for the mobile basic. It's just a purple line indicating to you that, hey, we have a positive close above the top line. Now with the mobile, I don't want to go too deep into it because it's not the buy signal I'm using, but you can see in this, this makes it look a little more easier than it is. But when you have a nice uptrend like you see here, that is the best time to purchase or to buy stock for mobile. When you have just a straight line like this is not a good buy time. If you're going down, that obviously that's not a good buy time either. You have to have kind of a 45 degree angle going up, but then again 45 degrees is hard to measure because if I go like this, it's going to be a much steeper degree angle. This is going to be less of a degree angle, so it's just kind of by experience and looking at the angle. All right, the last one on the top portion I'm going to show you is, this is one that you don't necessarily have to use, but I like to add it. It can get it to be a little busy, but if I add it, I will show you how it looks and what it is. And basically it is the opening range indicator. So it takes the first opening 30 minutes and it shows you what the range for high and low is. And that's usually sometimes good to use for if there's a breakout above it or breakout below it, and or it's good for bounces. So if you're looking for a good buy opportunity and you start seeing it bounce off one of these lines and going back up, depending on your other indicators and what you're reading, that is a good time to purchase. So that is, I'm going to remove it for now. I don't want it to get too busy here, but that is another one that you can use as the opening range. I'm going to remove that study. And finally, the lower studies, we have the FW Snapback Revision Final. It's got the SOAP in there, and I did alter it a little bit to best work in this environment. And this is the one we'll be talking about for the buy signals, and here it is right here. We'll look at this a little bit more detail here in a minute. And then, that's right, I removed that one. So the RSI stochastic MACD confluence combo is the bottom one here. And what I did here is I removed all of the lines and I just left the colors because we're not utilizing the lines. These are the lines that we're utilizing for buy sell signals to kind of give us an indication of where we're at. But this is also helpful as a confirmation. You can also, if you've never monkeyed with indicators before, you can also take this, and I'll show you. If you just grab it and move it up into the price, the top section, you can see it shows the little arrow there kind of shows that it should be more of a lower one here. But if I do that, let's try that again. If I move it up, hit apply, you can see the colors are then up here. If this is something that you prefer, your eyes don't kind of see the, you know, looking down, looking up, looking down, looking up. To me, it's a little too busy. I like to keep it on the lower part, but if you want to do that, you can definitely do that. And if you see yourself a buy signal, like right here, wasn't the buy signal that we're looking for. We also have these red lines, so this would have been a wait for me. But here, once it turned green, you would see that, okay, and it's green here, so this is a good buy signal, and up we go. So that is something else you can do with this indicator and other indicators as you move around within TOS. All right, so that is it for the indicators. I'm going to pause here for a second and get ready for the next part. All right, now that we have a basic understanding of the indicators, which again I will attach here at the end, you can find attached to this video. So let's take a look at what we are looking for potential buy signals. So the potential buy signals we are looking for are these arrows here on the bottom of the snapback. So the best thing to do is also have confirmation, confirming information with some of the other indicators. So for example, this indicator here, or this signal here, we have a good signal. It is, these lines here are green, and we do not have red here. Not too often will you get green and the arrow at the same time. If you do that, that's another strong indicator for a possible buy signal. So in this case, if we were to look here and we see that we are green, and the other buy signal is that the blue dots are down here. We don't have the purple dots just above showing that resistance. If they're farther up, it's okay, but usually we want to see the blue down here. I'm going to expand this a little bit. So in this case, we have a buy signal, which was right here. So a buy signal would be, we would wait for the candle to finish, and then the preceding candle was where we would purchase. So if we were to purchase here, in this case, we look up, and what I am looking for usually is a 1.5 to 1 win ratio. So with a 1.5 to 1 win ratio is kind of what I look at, but it's also good to know that, hey, am I consistently getting a 2%? So you can see here, if we were to follow this towards the end, you're looking at like around a 3.5 or 3.6 gain if you were to purchase here. Another strong purchase signal is the ready signal. I like to, when these are in unison, ready and then arrow, or arrow and then ready, that gives you a pretty good buy signal as well. The last part I want to mention as well when we start to look at the watch lists and the scans is we want to have stocks that are trending up, not going down. Right now, you can see this was a trending stock, so it makes it a little bit easier to look at and gives you a better chance to be successful in your stock purchasing. Next signal we have here is an up, and then here is a ready. You can see it's red down here, so that would tell you do not take, do not purchase. And if we were to look here, we had green, we had blue, those were good. We had the arrow, and we had the ready. Everything was in place except the red down here. And let's see if we would have purchased the stock. It would have gone up, and then it would have came down. So you can see if we were looking at the 1.5 to 1, this would have been a losing bid. So that was a good non-indicator down here. I won't go through each one. I really highly recommend that you do some back testing yourself of this, because that's the best way to get to know the indicator, get to know the signal, kind of see some of the idiosyncrasies of the signal, and be able to successfully follow the signal and have a better chance at the buy signals. Let's take a look at another one here. We have a ready went to a 2 as it was just kind of in a waiting status, flat period. Here was the next signal. We have the green arrow. We have black down here. However, it was red here. And so this would not have been a valid buy signal. However, one of the things you can do is, if everything is in place except the red line, you can continue to wait, and when this line turns green, then you could look at it as having a valid signal, and you could have followed this up to 5.61 there, but you would have had a successful bid. All right, so that is in a nutshell how to look for buy signals. Also, one other interesting buy signal that you will find is whenever you get a strong peak here down and then up like that, a lot of times you will see a nice reversal. Here it didn't work out as well, because you can see it went down, it went up, and then it went back down again. Let's see, well, actually you would have gotten a 1.53. However, you probably would not have jumped in right here, because this kind of repaints. It would go up, it might go down, it might go up, it might go down, and you're kind of waiting for it, and then the next one would have been a big drop. Let me see if I can find another area here. Like here's another strong one here too, where it comes down and then the peak comes up. And you see that would have been profitable as well. So those are just some of the basics. Let's take a look at scans now. So for scan, this is the main scan that I use. And let me get that a little bit smaller. So what you want to do is put in a custom scan. Let's take a look here and I'll show you. So the condition wizard is simply when you have the SOAP in there, the FW SOAP, I'll include this as well. You want to have the SOAP by, arrow location is outside lines, within 1 bar, it's true, within 1 bar. That's all that you have to have for that one. This one is a little bit more complicated, and this is, you're going to pick up the RSI. You're going to leave all of these standard, what is in TOS, the standard. You're going to have it greater than or equal to value of 50. You're going to have the stochastic slow K is greater than or equal to 50. So the stochastic slow, this is standard, and so is the RSI within Thinkorswim, so you should be able to bring these up. You want to have the stochastic slow K, greater than or equal to 50. And finally, the MACD value is greater than the MACD average. And obviously, again, the MACD is standard within Thinkorswim. Nothing has changed. Keep everything standard. It's greater than MACD average. All right, and the final one is volume average is greater than volume average within 3 bars. So basically, the volume average is also standard within Thinkorswim. Basically, what we're saying is that the volume average, which is the average volume for the stock, the volume average volume for the stock is greater than the volume average. So we're looking for a volume that's running higher than what is standard for that stock. So it shows, you know, some momentum. All right, so this is what you want to have set up. Finally, you want to scan in all stocks. Intersect with, we don't want to have a whole bunch of extra stuff. We're just going to scan intersect within optionable. And we're just going to exclude all OTC stocks. We're going to make the scan a little bit faster and a little bit easier. So once you have all that together, you can hit scan. And you can see here, I just have, this is your preference. I would just have $1 to $150 and minimum volume over $1 million. Nothing right there. One of the things that you can do with this scan is many times I will just X this out once I save the scan. This is a hard one to meet, and it's not necessary as far as finding some stocks to purchase. So if I just close that out and then I do another scan, and there it brings up some stocks. So another thing that I like to put on here, and the same with my watch list, is the implied volatility. So when you have a higher implied volatility, especially over 100, let's take a look here at HEAR. I'll show you what I mean. So in this case, we have a buy signal, and there is the ready, there is the buy signal. Many times too, you can purchase here when the red is just starting to run out. It looks like red might be starting to run out. So this might be, you might want to wait a little bit, but this might be a valid signal. But what I wanted to show you with the higher implied volatility is is the difference between if I click here and here. You can see how it doesn't take long to get up to 2% gain. So it's a lot more volatility going on. You can purchase and get through your win or loss more quicker and move on to more stocks. Now if I take a stock with a lower implied volatility, let's say SIMO has 36%. Now if I'm looking for here to here, you can see that's only 40%. So if I'm looking at a 1.5 to 1 win ratio, there's, you know, up here is the 1.5, so there's a much longer distance and a much longer wait. Not that there's necessarily anything wrong with it, but it's going to take a much longer time to turn over the stock than one with a higher volatility. And usually the higher volatility in some cases means much more momentum. So that's why I like to add the implied volatility here and also in my watch lists. Okay, so let's take a walk, or excuse me, a walk. Let's take a look at the watch lists. So one of the watch lists that I like to have is, and it looks like it's kind of worn out this afternoon, but you want to take a look at, let's edit, and extend that. So again, you can set what you want for your volume and your price. I just have 1 and 500. Uh, Again, we have the volume average is greater than the volume average. And the key one here is you want to have close is greater than moving average exponential length of 63, and it's also greater than 200 moving average exponential 200. And what that does is it really puts a lot of stocks into the area that are usually positive and moving upwards, a lot of upwards momentum. You can see here, I have some here. Let's see, that's 2. So if we were to look at these ones, you can see most of these are going to be ones that are positive and going up. So that's one watch list that I like to use. Another watch list is to look at the percentage of gainers. So this is standard within Thinkorswim as well. It's just the public percent change gainers. And so this helps you see stocks that are trending upwards. And also, I'll talk about the index here shortly, but these will give you a better chance at purchasing a stock that has the momentum going upwards and gives you a better chance of success. Again, success isn't guaranteed here, but it does give you a little bit better chance than if you're working with stocks that are in a downward trend. You can see I have the implied volatility here as well, so I like to do that by implied volatility and stick with these ones usually over 100. I like to look at those. The next part that you want to do, and you can do this as with all of them at the same time, is to, let's bring up, let's see, this is 4. So for instance, if I bring one up here, you want to right click, create alert, and what you want to do is you want to do a study. I've already got it here, but I will show you. Edit. So you want to do a study here. I've already got the FW SOAP buy is true. But if you were to edit it, you would find the FW SOAP outside lines. Again, SOAP buy is true within 1 bar. And click OK. And once you do that, that is saved in there like I have it. And I would do the SOAP buy is true. It's going to give me an alert. Create. And so you do this for each one, and whenever you get an alert, you know that you have an upward trending stock that has a possible buy signal, and you can look at that right away as soon as you get the alert and take a look at it and see if it's a good purchase opportunity, a good buying opportunity. After that alert goes off, what happens is if you go into Market Watch, you can see some of the alerts I have here. So for instance, this one was triggered. It's been triggered twice. Once it's triggered, it won't go off again. You have to redo it. So what you can do here is I go through and I click on the context and I go alphabetical and I look and I see, okay, triggered. So I right click, create similar alert, study true, create, and it automatically creates another active alert. So anytime these go off or periodically come in here again and look and make sure that you have these alerts waiting to be triggered and that they haven't been triggered. If they have, just go in here again and create similar alert, create, and there you go. You continue to have these stocks that are trending up, giving you alerts whenever you have a buy signal, which really it can increase your chances of having some successful buy bids and being successful. Again, looking at a 1 to 1.5 ratio, you can adjust, tweak as you want, but that's what I like to use here in the beginning as I'm testing this. It's been highly successful for me so far. One other thing I want to show you as well is it is a good idea to have an index. I'm still refining this, but I see this is a little bit off of the screen, so I'm going to narrow this a little bit. So the main thing I have in here is the S&P 500 SPX. I like to see where that is during the day. And the two main ones you want to have is SVXY and UVXY. So these are usually opposite of the other. If one is down, one is going up. If one is going up, the other is going down. And it's also good to see as well how weak the market is. When the market is really weak, the SPX is down and the UVXY is down like it was yesterday. Anything that it makes it really hard to be successful. So those are periods where you may want to stay out of the market because it is so volatile that even in some of your really good buy signals, you get more losses than you get wins. So that's just a way to kind of measure how the market is. And you can also do some purchasing within SVXY if the market is down, because this is usually going to be going up and it's a good purchase opportunity when the market is bad. So you may just want to sit on, there's a few other ones just like this that are alternates, but this is just for starters for you. And I know I still have to tweak this some more, but a good way to gauge the market and see how things are going. And you could have stayed within SVXY during a really down market and still made some money while the market was really down and out. So it's just an alternative way to continue to make money. Measure the market. If you see if you see SPX, UVXY down quite a bit, and you're kind of taking a look at downtrends, it's a good idea, like I said, to stay out of the market, or at least stay out of this part of the market until things kind of rebound, because you'll end up losing more money than you win many times. So just another thing to be aware of. You can then actually back test your alerts as well. So another way to back test is as you're putting in these alerts and you are getting messages about these alerts, alert like right here. So let's say at the end of the day, I am looking at, where's the alert? I go back and I look at this alert. Okay, CPS, let's say I didn't have a chance to purchase these. But let me go back. It was at 1410, and then there was a buy alert. Well, let's see if we went 1410 on CPS. There was a buy alert. So 1410, where are we at here? I gotta enlarge this again. All right, 1410. So there was the buy alert. So you can back test and say, okay, well, in this case, we wouldn't have taken this purchase because of the red lines. But as you go through, that's just another way to back test. Take a look and see that, oh, okay, this is a bid that I would have taken if I had the chance, or if I had the funds available, didn't have them tied up in something else. Go back and back test all of these alerts that went off during the day and see how you would have done, or see how the system worked. So that is basically it in a nutshell, folks. Leave me some comments. Give this a try. I think that you'll be very glad that I was able to put this together and show it to you. It's a very simple concept. There's a lot of more details mixed in for folks that are a little bit more advanced. But one of the things we're always looking for is just something simple, easy. We don't want to have 20 different things that we have to check out for a signal. We don't want to have to do a lot of manual labor looking to find out, is this going to work in a day trading type of environment. You can try this in different time frames. I believe it would work in pretty much any time frame. I've just been utilizing it in the 5-minute time frame, and it has been successful. Again, words of wisdom: stay disciplined. Oh, the market just ended. Stay disciplined. Again, discipline, discipline, discipline. Don't be like a kid in a candy store. Oh, this is shooting up, I'm going to drop in. Stay within your system. Be disciplined within that system. And also just think $100 a day. Try to make $100 a day. If you make $100 a day, you're doing fine. You're doing well. You make your $100, shut it down, or just have fun playing around, trying to figure some other stuff out, working the system. Don't put any more money in, just try to get that $100 a day, and you're off to a good, successful direction. So leave me some comments, give me some thumbs up. I hope this works for you. I'd like to hear how it works for other folks, and if you find any other interesting tidbits within it. So thanks. Take care, everybody, and we'll see you again hopefully soon. Bye-bye.